It's working. It looks like we're working fine. So we'll just get going. Anyway, today, of course, is Thursday, March 2nd, the day after the implosion in the market. The Trump rally continues. Let's put it that way. And we'll go over all the levels and the new levels now, because we have taken out significant price levels. But of course, welcome to the webinar. Today, of course, is March 2nd, 2017. So again, I've got the monthly charts, and again, I think it worked out pretty well because the closeout of February was just the other day. Now, I'm just going to kind of run through these charts real quickly. I haven't marked them up at all, but obviously we know the key levels that we're looking for. We ended up closing out the month of February at 2363. We're about 60 points now above the upper band, and you can clearly see that over here. Here is the VIX. All right, the VIX actually ended up closing to the upside above the 1250 line. So again, I think with the nature of the market and with the way the VIX is trading, we'll probably end up getting that spike up in the market driving down, or a bit of a pullback that everybody's been kind of looking for. I'll go over those numbers in a little bit. Again, here's the Qs. Again, the Qs don't show the upper levels, the extreme bands, but the comp does. So you can see here on the NASDAQ Composite, we're over 200 points now above the upper Bollinger Band. Here's where we closed, 58.25. 56.01 is the upper band. You know what? Okay. There might be a delay. I apologize. There might be a delay today only because I think my internet connection is pretty slow. But let me know if you're seeing the comp, Andrew. All right, good. All right, let's move on. Now, this is the TLT. And again, we kind of had the sell-off against the 140 line, dropped all the way down to 116, and now we kind of crept back to the 120 level. So I do think we have some more room down on the TLT. Here's the actual spot price of gold. Again, we've had a 2-month now rally in gold after the sell-off. And then here's copper. Now you can see with copper, it's kind of interesting. I mean, I remember going over this chart a couple of months back and saying how copper, was finding support at the mid-band. And you can see that it did. I mean, it just kind of traded right against that mid-band for a significant period of time and a number of months. And obviously, we know what happened to FCX. So, that thing took off based upon this move in copper. The question is now we've got a doji bar here. All right, so this is one we want to look at to see if it comes back to retest that mid-band again. And then here's the XLE. XLE made the rally off the bottom, roughly the 50 level, ran all the way up to 78, and basically closed right under that 71.88 line. And we'll go over the levels when I look at the short-term charts. But here's the actual crude, the actual spot price, okay? And again, this becomes significant because that mid-band is 54.67. We closed at 54.01, so we still closed below the mid-band, all right? Ideally, I'd like to see that clear it. If it doesn't, then I believe we drop back down and certainly do a retest of 39. No question about it. If not, maybe even drop lower. But right now, the momentum is turned positive. So this is going to be very interesting to see if it can clear that roughly 55 level. And then again, here's Apple. So again, Apple is similar to all the indexes. It's kind of in hyper strength right now. Above the upper band, closed out the month at 137. Upper band is 128.10. So again, Apple is back to showing unusual strength. I mean, highly unusual strength. Now we go into the short term. Okay, now this is really very interesting, okay, because obviously, you know, one of the things I had been looking for was perhaps resistance at that 2375 line. And to me, I think there were a couple of very important things that happened the other day. I mean, obviously, the first one is we blew through 2375. Right? And again, that was key. You can see the next level up to the upside is 2438 roughly. Okay, 2390 is the confirming line up, and yesterday we actually closed above it. So not only did we jump above it, we closed above the next confirming line. And the key today will be to see if it can close above that level today. If it does, then I think the market runs even higher. But as you can see from this chart, it's gotten overbought. And yesterday it kind of bounced off the upper band. And then here's the VIX. Now, you can see yesterday, late in the day, the VIX came back up and closed above 1250. So I thought it was interesting. And honestly, going into Trump's speech with Congress, you know, one of the things I was looking for was, okay, I don't think the market turns, or at least corrects, until we get a close above 1250. And the interesting thing was that it did close above 1250 on Wednesday. So quite frankly, I was looking at it and saying, you know what, right now I might be biased to the downside. And of course the market, you know, Trump does his speech, the market screams, takes out 2375, and, you know, proceeds to have a huge explosion day. And quite honestly, I haven't seen a day like that in I don't know how long. It's been years since we've had that kind of price action. But in terms of the VIX, the next level above 1406, okay, is going to be 1563, right? My feeling is if the VIX runs up to 1563 and then drops and then finds support, I think there's a very good, I think that's a very key indication that perhaps the market will have a sizable pullback. And when I say sizable, I mean, you know, it could be 5%, 8%, that kind of thing. If it stalls at 1406, and I think then we're going to continue to see more of the backfilling and then rallies. But again, we know with the S&P what the upside confirming line is, okay? So if that were to, if the market were to close above the 2390 level today, then odds are it will continue up. But again, what's happening with the VIX is we've been really in this long, tight kind of consolidation pattern, which usually leads to a breakout. And at some point we will get that breakout. I just don't know when. Now here's the Qs. The Qs, as you can see here, the 131.25 was the objective, and it was hit. All right. The next line up is 132.81, and I think if the, you know, it's interesting because 129.69, the confirming line down, has acted as support here. So my feeling is it'll probably act as support again, and we'll make another run back up. But unlike the S&P, which did yesterday close above the next confirming line, the Qs did it. And then here's the diamonds. Okay, the target is really to 212.50. It got to 211.59, so it was within a point of that. Next level up is 214.06. That's the next confirming line, and then downside confirming line is 210.94. And then here's the TLT. TLT failed right at the 121.88 level. And the upside confirming line is 119.53. So for the TLT to actually make a move back up, it would need to close above that 119.53 for 2 days. And I am bearish the TLT, all right? And I think it drops lower. I'm thinking it could drop as much as down to 113, maybe 112. And then here's the GDX. GDX closed yesterday. The line isn't quite accurate there. The downside level is 23.05. It closed at 22.98 yesterday. So the point here is that at this time, I don't know if it closed under it 2 days ago. I'm not 100% certain. I'll have to look at that. But certainly 23.05 should be resistance, and 23.44 should too. And then here's the XLE. Now, the XLE, to me, and again, I'll go back to this level, that 71.88 level. That, to me, was the key level in the XLE. And I do feel that the XLE is bearish, even though we've been getting this counter trend move. I think 75 becomes a very significant point of resistance. Now, having said that, we did close yesterday above 72.66. So a close today above that would mean that the objective would be up to 75. And again, I think at 75, it probably has very strong resistance. And then here's Apple. And here's the 60-minute chart of Apple. Apple hit its objective, the 137.5. Next level up is 143.75. Confirming line is 139.06. All right, so it did close above it yesterday. So if it does close above it today, 144 becomes the active objective. And again, Apple to me is kind of mirroring the overall index. It's just showing just incredible strength. But this move, I have to tell you, has been really remarkable. Just to me, something that I don't ever recall. I don't ever recall seeing a move like we've had here. And when I say a move like we've had, I'm talking about since really the day before the election. And that's when it bottomed. It's really been straight up ever since, just been unbelievably strong. But we know we're well overbought because of where the price is in relation to the upper bands. Any questions on any of the indexes? I'm going to go back real quick to the VIX. And we'll look at some of the live charts after I close down the PowerPoint. But you can see with the VIX here, it's been kind of interesting. I mean, it's been bouncing really between 1250 and 1094. It's almost like you could time the market just, when the VIX stalls at 1094, stalls at 1250. Just it's been incredibly, I would say, accurate trading between those levels. The question is, do we cleanly clear 1250? That, to me, is the question on the VIX now. And I didn't look at it earlier, so I didn't get a chance to see where it's at, but we'll take a look at that when I close this down. Okay. All right, now I want to talk a little bit about earnings because I'm getting a little bit more honed in on some of these earnings trades, both pre and post earnings, and that's what's kind of got me excited here on the earnings front. But this was a chart from, it's really not last week, it's the last webinar, okay? And I showed this, Bunge. BG had gapped up. It was up 10% on the day of the earnings. So it gapped up on the 15th and screamed and continued up, obviously closing above the high of the gap bar. Now, this was a chart I pulled off yesterday of Bunge. Okay, and you can see what happened, okay? Pretty much traded to the upside and continued to drift up after it was able to close above the high of the gap bar. So if you look at this, this is roughly about a, I don't know, almost a $7 move, another 10% up, roughly. But this is the daily chart, and I thought this was pretty interesting, okay? Couple of things going on here that I want to point out, okay? Number one, the money flow has been extremely bullish, all right? Down here, the ADX line was well under 20 going into earnings. Of course, day two, we had to close above the high of the gap bar. And then the other day, the little doji bar, when it hit 82.66, was the 10th day of the rally. So it basically ran 10 days straight up. And then lo and behold, the rally ended. And you can see today it's down $1.31 as I write this. And by the way, you know, obviously it goes without saying, it was well above the upper band. All right. So we know right now 79, by the way, 79.21 should be support. Okay. A close underneath that, and I expect it to drift down even lower. But essentially, here is the setup. Okay, we've got a gap up off earnings, and we have a close above the high of the gap bar, and the ADX line is under 20. And then if you look here at the daily chart, what happened was the ADX line started to head up ultimately across the 20 level and just continued higher. And now it's at 44, right? And by the way, to interpret these levels, anything over 40 kind of is exhaustion. All right, so that's kind of tying in with the idea that after 10 straight up days, you really want to pull profits off. But this is the setup. Gap up off earnings, close above the high of the gap bar, and the ADX line on the 20. And, you know, I would call this kind of a post-earnings setup. Now, here's the second setup. This is a gap down off earnings and positive money flow and the ADX line under 20. I'm going to show you two recent examples. This was Creighton, KRA, from the other day. And I picked this up. I was looking at it. I said, okay, money flow is positive. We've got the ADX line under 20. As you can see, it gapped down. Okay, off their earnings. And there's a 30-minute chart. Now, again, you'd have to be very nimble, obviously. You know, basically have a buy order to catch it somewhere down here, because this is the first 30-minute bar. So if you look at this 30-minute bar, I mean, it ran from a low of 25 to basically 28, which was the upper band. So in 30 minutes, it ran $3. But say you weren't nimble enough to get that, right? It did pull back, and you could have got in around 27, and from that point, then it ran almost $2, okay? So it's still a decent move in 2 days. And again, if you're using options, obviously you get the benefit of tremendous leverage here. And then here's another example. They reported the other day. I know nothing about this company at all. It's NXTM is the symbol, Next Stage Medical. So again, we have basically the same situation. Positive money flow. We've got ADX line under 20, gapped down, okay, and you can see gap down, spike down, and then proceeded to rally. And then here's the price action intraday on a 30-minute chart. Okay, so again, low of roughly 27, bounced up, okay, pull back to around 27.70, and then proceeded to move up about $2. So again, this is kind of a 2-day reaction after the earnings. And, you know, pretty strong. Any questions on any of this? Then I'm going to go to a live I'm going to go to some live charts. Where are we? Okay. So the second setup is we've got a gap down off earnings, positive daily Chaikin money flow, and the ADX line under 20. Now, let me pull this down, guys. Now, give me 1 second. I don't like having that auto hidden toolbar. Okay, now, it was interesting. I was scanning through some of the earnings today, and actually from yesterday. And let's see, let's go to the first. And again, this is where you can find the earnings in case nobody realizes. Go to briefing.com. You might have to set up the account. But, you know, I started looking at it and go, okay, let's take a look at some of these stocks that reported and see if they fit that setup, okay? And the one stock that came to mind was Best Buy. And here's Best Buy. Okay, you can see they reported yesterday, right? Now, what do we have here? We've got positive money flow, ADX line under 20. We've got a gap down. So I was looking at Best Buy, and I said, well, if this follows suit, Best Buy should rally. And we look here at the 30-minute chart. Obviously, it's underneath the lower band, right? And late yesterday had a little, you know, and by the way, obviously we didn't have a close underneath the low of the gap board, nor do we have a close above the high, okay? Closed yesterday roughly at 42. And then today, it just, I saw it this morning, I said, geez, it just screamed up, and where did it go to? It went right to the mid-band, hit a high of 44.78. The mid-band is 44.77. So it took it out by a penny. And let's take a look here. We'll look at the options here. So roughly, it closed at 42. If we look at the at-the-money call, which is the 42, okay. Now, yesterday, it closed at 56 cents. Right now, it's bid of 239. Now, again, not a lot of volume, by the way. Not a lot of open interest. But the spread isn't too terribly wide. You know, you could probably dump these calls right now for 240. So if you look at it, that's over a 300% return, basically overnight, based on, you know, Best Buy reacting based upon the scenario that I had explained. Now, let's go out of the money. I'm curious now, because the mid-band was roughly 44.77. So there is a 44.5. Let's see what these things did. All right, check out these options. They went from 5 cents previous close. They opened at 11, so you had a double overnight on these. They went from 5 cents to a high of 56 cents today. And what's kind of interesting about this structure is you know, once it bounced from underneath the lower band, we know basically the mid band is the objective, right? So what's kind of interesting is you can trade that half and half strategy, buying half at the money, half just below the mid band. Now the $1 million question here is, okay, the $1 million question is, does it get through the mid band? Because obviously if it got through the mid band and ran to the upper band, it's 47. So you're talking like another $2.50. If it hit the upper band and you bought calls for a nickel, you know, those are going to be worth $250. Now, here's another way to skin this. This could be very interesting. Because now remember, these are weeklies. These are weeklies. They expire Friday. So right now, Best Buy is trading around 44.50. So if I turn around and look at the, oh, they're expensive now. The at-the-money put is about 50 cents. So I don't like that. You see, if you could buy these for, say, a quarter, right, then you can sit and basically have no risk. But I'd want to look at the average true range. Let's take a look here. Okay, average true range is $1.38, and look at it, it's going up. So it's roughly, I call it $1.40 just to round it. But my point here, actually, if you think about this, you could be sitting here, if you did the half and half strategy, all right, already booked the profit on the at the money, turned around for 50 cents and hedged the position. Now all you need is, if it goes up, you really need a move greater than 50 cents. All right, and if it ran to the average true range, you know, you'd be in great shape, because it would be roughly 140 less your loss of 50 cents roughly, which would be net you an extra $80 a contract. If for whatever reason it failed and just dumped, you know, you still own the put side. So it would have to drop more than 50 cents for you to recuperate the money. It'd actually have to go maybe 55 cents and you're breaking even. If it went the average true range, you'd still be up another 80 cents. So it kind of opens up the doors. That's what makes these weeklies so interesting to me, because it opens up the doors for different options and possibilities. Now, ideally, to me, if you were in this trade, I'd be watching this thing into the close, because it's possible that those at-the-money puts could come down, all right, as the time premium starts to erode today. And maybe you could pick them up for only 30 cents or even 40. That would be a better scenario. Or the other situation, obviously, is, you know, just book your profit and run. Because what did we say? 44 halves. And 44 half right now is roughly 39. Well, they're showing 39. But, you know, if you bought them for a nickel and they're worth 40 cents, you know, you might want to just say, all right, I'm happy, and go. Let's take a look at a 10-minute chart for an indication as to what this may do. Okay, again, sitting right up against the mid-band. So this is a stock, you know, unfortunately you're kind of forced to watch it if you still want to maintain your long position to see if it'll break out above the upper band. But I think the point I'm trying to make here is the setup. Because now, this is, I don't know how many stocks I've seen. Because, you know, I've been trying to figure out, okay, what's the logic that says, okay, where is there a bona fide reason to trade both pre-earnings, obviously, and post-earnings? And where do we put things in our favor? Now, as an example, you know, we looked at the ones from the PowerPoint, all right? Let's take a look here. NXTM. This was one of the stocks we looked at. Okay, now, look at NXTM. I want to take a look at a 10. Okay. Now we looked on the 10 here. We know we have the 30 in an uptrend, gap down, positive Jake and money flow. It was under 20 level. Now it's setting up again here for another buy. Basically took out the mid-band on the 10, and then you can see it kind of stalled. So, I mean, to me, I would have been gone once I saw that thing starting to stall there. I probably would have been gone even in here. But look at how it came back and retested the mid-band. There was another one, Rail, I think the same day. Okay. This was another one, Rail. This was the same situation. They reported. Let's take a look on the daily. Okay. All right. It was well under 20 level, slightly positive. This wasn't all that attractive because it just turned positive. But again, if you look here on the 30, okay, it reversed down here at 1275 and ran right to the mid-band of 1427. So, I mean, theoretically, you know, you could have made money on this thing if you were nimble enough. The other one was KRA. Okay, now look at KRA again. This was the one that made that really fast move. Oh, let's take a look on the 10-minute. Okay, so really the 10-minute bar, look at the first bar. I mean, this thing was like a $2.50 bar. So, I mean, you would have literally had to have an order in at the open, you know, to capture that. But what's kind of interesting, it just kind of flatlined for a couple hours, and then boom, and ran up and hit the mid-band. And I think there was one more. Oh, DRQ. I was looking at this one. All right, there's DRQ. Okay. I didn't really like this. See, this was slightly positive. You know, what you want to do is you want to see it where, you know, it's more like this, not like this. But say you did DRQ. Now look at DRQ. Okay. Gap down, never closed above the high nor the low. Then yesterday, this was the earnings day, of course, and then yesterday it gapped down again, so we had to close underneath the low. So you would have been biased to the downside. You know, another way to look at this is, let's scale down to a 10. Okay, even, well, late yesterday, over in here, we had to close underneath the low. But this is kind of an interesting setup because it seems to hold true. Oh, let's see what Dollar Tree did. Nah, really didn't do much of anything. But you know, you can. What's nice about this is you can go and take a look at the company's reporting, all right, and then see if they meet those parameters, like this LXP reported. All right, now look at LXP. Strong money flow. Look at down here, well underneath the minus 20 level. So now we go to a shorter term chart. Let's see what happens. All right, still trading within the body of this first gap bar. Okay. Here we had the little reversal. So this was a small move. And again, now it's trying to firm up. This thing starts to head up. We know the objective's up to 11.14. Not going to be a huge trade, but nonetheless, it would be a winner. But that's the setup. So I'm finding that it works. It seems like it works more often than not, which I'm happy to see. Yeah, true. You can even go to a 5-minute. Yeah, you know, that's probably true. Let's take a look at the... But you know what's interesting, like that BBY trade? There's no 11 here. There's a really thin. I mean, look at this. They're quoting 7 to 20 on the 1250 call. But you see the logic, like with BBY, what's kind of interesting about that is we can kind of use the mid-band as a price objective. So buying calls just underneath that would have been a heck of a trade, buying a 44.5 call. All right, now look at it. There she goes. 44.5 call, which is basically 27 cents underneath the low of the mid-band. And it hit it basically to the penny here. So that 5-cent call, we know, would have gone to 25. It actually went to 40. Now the key is, does it break through? And again, if you were long with that 44.5, right now you'd be looking at it and going, okay, let's see if this does continue. We're only 13 cents away here on the 10-minute chart from breaking through that upper band, that mid-band. And, you know, I think we had the mother of all moves the other day, this Palo Alto. That was an incredible, incredible drop. It's about a 25% drop. Now, the question is there anything that would tell us to be positioned short going into earnings? Get rid of the, not that. You know, that's the million-dollar question. Now, the thing was, we did have positive money flow, but here's something that's kind of interesting here about Palo Alto. If you look down here, this line, this ADX line, had peaked out at over 40 and was already coming down into earnings. So, as I said before, this typically, over 40 typically signifies exhaustion. All right. So, and you know, if we look back over here at the bottom, look at this. this hit almost 40, and that preceded the run up. And then, lo and behold, it exceeds 40, and it had been above 40 before the earnings release, and was heading down. And look at it, darn thing cratered like unbelievable. Now, I don't know. I didn't price out. Sorry about that. I didn't price out call or puts on this. But let's see. I wanted to see what the at-the-money put was. Because obviously they exploded. All right, so it closed the day before at roughly 152. All right, so let's take a look here. And look at this, they had dollar increment options. Well, let's take a look at the 150. The 150, I don't know why I can't get this. All right, call it 4 1/4. So the 150 puts on Palo Alto, let's call it 450. The 150 put went from 450 to roughly 35. So a two lot of $900 went to $7 grand. Incredible explosion. God, now I'm thinking, let's take a look, 150. Let's look at the 140s just for grins. You can see they're about 25. Okay, so they were a buck. $10 out of the money, they were still $1. And then they went to 25. Look at that leverage. A 10 lot, and you walk away with 25 grand. You're probably right, Andrew. He says, I'm going to read, that's funny. You would have to explain your selection process to the SEC after a move like that. Well, you know, I don't know. On a 10 lot, I don't know if they'd come calling, because look at it, the open interest is about 500. So a 10 lot still only about 5% of the open interest. Now, if you went in and bought 500 of them, then that would be different, because that would stick out like a sore thumb, because you're basically 100% of the open interest. So what would 500 be? $500 times 2,500 is what? 100 1/4. So that's taking 5 grand, turning into 100 1/4 overnight. But, you know, look, as you know, I've been looking for this holy grail. It seems like forever, you know. And really the question boils down to, when is it worth trading pre-earnings, or when is the risk warranted? All right. Number one, I'm pretty convinced right now that trading post-earnings, okay, if you tie it in with that ADX level and the Chaikin money flow, you know, usually you get that bounce, just like BBY did. Now, some are going to be strong, some are going to be tepid. You know, you might not get a run from the bottom band to the top band, but, you know, you might get a bounce. And the ability to make some money, and quickly, and that's the key. Because, you know, to me, there's nothing more frustrating than buying something and it just kind of sits and does nothing. The beauty of these earnings trades, to me, is the fact that you know there's going to be movement, okay? it's going to move one way or another. I mean, you know, it's basically a market overreaction to earnings, and you tend to get those snapbacks, and that's what makes this kind of interesting to me. The million-dollar question has always been, well, when does it warrant trading pre-earnings? Okay. You know, and is there something we can determine or use to basically put us in a position to want to trade pre-earnings where the risk is warranted? Because obviously, you still need a move big enough, okay, to warrant covering the cost of your option. Now, I'll give you an example. It was funny. I was talking to John, Andrew. You'll appreciate this. And I pointed out this stock to him, DIN. And what was kind of interesting was I saw DIN was trading underneath the lower band. And obviously, you can see here, money flow has been completely negative. The negative here was it's getting way overbought, okay? As a matter of fact, the ADX line is 62. Right? So this is a really extreme oversold condition. He went in and bought the 55 strike. All right, I don't quote me on what he paid and what he sold it for, but he made money. And, you know, he said to me, he emailed me, and he said, geez, you know, if I held on, he had a four-bagger. So he might have paid, like, say, 85 cents for him. And, you know, I mean, a 55 from they're probably worth 3 right now, even. But again, you can see how it opened gap down, just proceeded to trail down. And even today it's down more. But then he emailed me back. Let me take a look at something here. And he said, well, geez, the other thing he had looked at, I'm going to point it out on a weekly. Hell is it? Okay, if you look at a weekly on DIN, look at the money flow on the weekly chart. It was also negative. So we had a completely bearish situation on this stock going into earnings. And again, going back to the pre-existing condition to determine if it warrants trading pre-earnings. I mean, generally, I mean, obviously, too, you know, this is a downtrend. Money flow is negative. To me, it seems like the money flow seems to be more, how do I say it, more in line with earnings as opposed to the trend. Okay, in other words, what I'm saying is this: you might have a stock in a downtrend, money flow is positive, and it seems more often than not that trading in the direction of the earnings flow, of the money flow, is probably your best bet. Now, when they line up, that's even better. Like obviously here, you know, it lined up where the trend was down, even though it was so oversold, money flow was negative. Yeah, just John made a nice trade on this. And I pointed out to him, I said, because, you know, to me, my logic was, okay, it's going into earnings, and it's so oversold. So I was legitimately looking for a bounce. And, you know, he went in and bought the puts, which was obviously the wise thing to do. But I stayed out of it because, you know, I was thinking the opposite way. I said, well, geez, you know, the damn thing is so oversold that it's probably setting up for a buy. But, you know, the interesting thing is that was that, let's take a look at the 145 on PA and W. Palo Alto Networks, 145. But again, it's tough to argue with the money flow. You know, so this stock was cratering before earnings. Let's take a look here. Okay, so there's the 145. So it looks like this is about 250. Call it 260. That's 260 and went to almost 30. That's an unbelievable move. But again, you know, we know that these things can happen. And I don't know, percentage-wise, that was what, a move of like 24? That was like a 24% move on Palo Alto. Just a spectacular move. I don't think we've seen a move like that since like GMC. Green Mountain used to make moves like that. But, you know, again, on Palo Alto, you know, the ADX had peaked and was already starting to head down. So to me, it was overbought. Now, here's the problem. Okay, I'm going to compare and contrast that to one stock that did report this week, just so you can see the minute detail. And that stock was Dycom. All right, now we look at Dycom. Look at it. Money flows positive, right? Let me see here. Oh, wow. This was under 20. See, I look at this. Yeah, this was well under 20. And lo and behold, it screamed up. Interesting. So Dycom, I take this back. Dycom kind of did what you would expect. Now, if we look at Dycom, let's see what they had in terms of options. It closed roughly 82. And by the way, just so everybody understands, this ADX level, okay, the significance is if it's under 20, it tends to mean that it's non-trending. So what's happening here is it's almost like it's exploding out of the earnings. Let's take a look. Let's look at the 85. This has even more volume than Palo Alto. Okay. I don't know. All right, 310. So these calls, the 85 was 310, $3 out of the money, and you can see right now it's probably, you know, about 12.50, which kind of surprises me. I mean, look at this bid-ask spread. Obviously, no volume here today, but the open interest is greater than Palo Alto. Now, here's the thing. If today, the high of yesterday was 97.77, Right now it's trading at 97.50. Ideally, if this can close above the high of the gap bar, then I would expect it would continue to move. But, you know, I take that one back because that one actually fits the parameter I was telling you. I mean, if you're going to trade pre-earnings, here's the situation. ADX line under 20, bullish Chaikin money flow. And sure enough, it just exploded out of the consolidation area here. All right, but that's what I wanted to talk about today, the real nice thing, the real key thing. Yes, Andrew, you're 100% right. I'm going to read this comment, and thanks for saying that. He says, on DIN, the ADX had not peaked yet. Absolutely. See, if this ADX line had started to come down before earnings, then I absolutely wholeheartedly agree. Going to the upside would be the bet. Okay, but what's interesting is, you know, it was continuing to go up. So the ADX line was confirming the down move. Therefore, confirming the logic of the short side trade going into earnings. And again, I think the interesting thing about it was, you know what, I've got to look at, ask John tomorrow. He didn't pay a whole heck of a lot for the puts because, of course, he was out of the money. You know, he bought the 55 strike. But nonetheless, I remember he did email me and say, geez, if I held them, I would have had a 4-bagger. And he probably have a little bit more today. Personally, I just kind of like this trading. I just don't, you know, I'm just trying to find some setups that are fairly consistent to trade because let's face it, if you have a situation where you put up, you know, money and you make 6, 7x or 6 times it on one trade, well, quite frankly, you know, you could have a lot of losers along the way and still be ahead of the game. You know, that assumes the worst case basis that you're directionally just wrong, okay? But then you might have a situation like a Palo Alto where, you know, you have an explosion. You know, you got a 10-bagger and, you know, one trade, you know, you've cleaned up. But the other thing I'm finding particularly appealing is, you know, the post-earnings setup, combining that with the money flow and the ADX line. And at this point, it's probably, the percentage is definitely favorable towards that setup. And again, you need a down gap, all right? You need Chaikin money flow to be positive, and you need the ADX line under 20. And usually when that happens, and most of the time when it gaps down, it's going to be below the lower band on the 30 or the 10. And then usually you start to get that, you know, that bounce back. Now, in the case of BBY, as you can see here, it didn't happen in one day. It happened in 2 days. Let's see if it got through the mid-band. Look at that. Hit a, let's see here. This bar has a high of 44.63. So it's still struggling to get through that mid-band. But again, the point being here, in the case of Best Buy, you know, the reaction was on day 2. All right, it never had that quick reaction. So, or in the first day. So, for example, if this were a Thursday and they reported, or they reported before the open on a Friday, it's best to go out to the following week. But sure enough, I mean, if you look at this, this is 42. This is what, a 278 swing on a $42 stock, which is a nice little swing for one day. And, you know, quite honestly, it's not over. I mean, you know, You know, as I said, if you had bought those, what, 44 halves, you'd be sitting here going, okay, let's see if it gets through this mid-band. And what's kind of interesting, it's hanging at the mid-band. That's what I'm finding interesting. And the more time goes, the more that the time passes today, the less the 44 half put's going to be worth. So now you can be in a situation where, all right, look, they're showing 46 cents now. What, am I right? 44 half, yeah. 44 half. They're showing last trade at 46. But to me, the ideal situation would be these 44 half puts start to come down. And, you know, maybe by, you know, 3 o'clock, you know, look at them now, they're 41 cents. You know, maybe they come down to a quarter. And now you can actually hedge it and just tomorrow say, okay, let's see what happens here. Because the ATR is certainly wider than the cost of both your put and call. Heck, if you could pay 25, you'd be into the deal for 30 cents on an ATR of almost $1.40, which gives you $1.10 upside with no risk. Your only risk factor is it doesn't move. But again, you know, the other way to look at this is, at this point, is obviously just watch it, see if it gets through the mid-band. If it does, then just stay long. And then, heck, if it hits the upper band, then you book and run. Anyway, any questions? I'm really beginning to like this setup because it really seems to work pretty well. $0.05. All right, great. Well, listen, I'm going to close down for today. My voice is kind of going, but I hope this has been helpful. I'm really, what I'm going to do next is try to put in a document some of these setups for pre and post earnings. So at least, you know, we can take a look at them, and then you have them. I must have seen in the last, I don't know, 2 weeks, a couple of deals that absolutely just took off post earnings. All right, based just on that simple setup. All right, so this is the only one that really hasn't bounced, this LXP. Yeah, I know. I agree. The pre-earnings, boy, I really, you know, because look, guys, we have a pretty good idea of the industry group that tends to have, the industry groups, I should say, that tend to have big moves. All right. You know, we combine them with a couple of things, you know, like the money flow and, you know, trend direction at the ADX levels. And then we hopefully have a logic that says, okay, you know what, this might be worth a shot. Because, you know, here's the thing, even on PANW, I mean, say you were bullish, right? And you did a deep out of the money put spread. I mean, you got killed because of the extent of the move. You got absolutely murdered. Now, Palo Alto right now, if we look at that, look at how far below the lower band it is. You know, at this point, I'd be biased to the upside, looking for a snapback, which, as you know, could be a pretty strong snapback. And if you think about it, now the money flows flip negative. But the logic here dictates that the selling is overdone. And, you know, we can tell that just by looking at yesterday's earnings day. Look at the volume here. 21.8 million shares traded. You know, and that's clearly the highest day that's traded on this stock in years. Now, what I would want to see here, the high of this bar is 120.99. Ideally, I'd like to see a close above the high of that bar, and then a little pullback, and then you'd go long. But right now, you can see it still hasn't done that. So I'd be reluctant, right, to initiate a long now. But here's where this gets really sexy, if you think about it, right? Look at this. You can't even see the data. It's so scrunched. But let's say the low here is, what, 118. The high here is, no, that's, sorry. The high is 121. That low is 151, call it. 151 plus 121, the 50% point is 136, which is kind of interesting because the 200 EMA is 136.54. Excuse me. So if this thing snapped back, to me, it has the potential of moving about $20, and that would be objective one. Okay, it's inching there. It's trying to get through it, but that's why, you know, with these extreme moves, we know. I mean, you know, we know it's going to have a. You didn't get him? Oh. Yeah, we know that they're going to have a move. You know, and they tend to obviously be fairly radical. I don't know what's going on here. I think my ISP is cutting in and out. All right, good. Did those handouts go through? So it looked like there was a error. All right, cool. All right, well, listen, thanks for being here. We'll see you again in 2 weeks. Have a great week. Thank you.